Welcome to the Eyes on ESG video series. I'm Lorraine, Counsel in the employment team.
And I'm Clara, Counsel in the banking and insurance team at Arendt. Today, we're discussing why diversity matters for all entities of the financial sector, and in particular for listed companies, banks, insurance undertakings, and investment funds.
Diversity goes far beyond just gender. It encompasses age, religion, race, nationality, ethnicity, education, professional background, expertise, and skills. It aims to prevent groupthink, enrich debates through a variety of perspectives, and reduce biased decisions while fostering creativity and innovation.
It operates on two levels. Firstly, as a feature of the management body, because financial institutions must consider a broad set of qualities and competencies when recruiting board members. And secondly, as a responsibility to promote diversity across all staff positions throughout the entire organization.
To give a brief introduction, diversity has become a regulatory, legal, and strategic imperative and is under increasing scrutiny from employees, investors, and regulators. In recent years, we have witnessed a shift from soft law guidance to hard law requirements across multiple sectors when it comes to diversity. Luxembourg employment law prohibits all direct or indirect discrimination at all stages of the employment relationship and requires equal pay for equal work between men and women. The EU Pay Transparency Directive will further enforce these obligations. In addition, companies must take a proactive stance against all forms of workplace harassment by establishing clear policies and providing comprehensive trainings. Market studies concluded that by fostering a culture that values diversity and operates free from bias, organizations will enable their employees to bring their authentic selves to work, resulting in higher engagement, stronger collaboration, and ultimately greater productivity.
In March 2025, Luxembourg submitted a bill of law on improving the gender balance among directors of listed companies. It requires that by June 2026, women occupy at least 33% of all board positions in Luxembourg-based companies listed on regulated markets in EU member states. It sets out binding measures, reporting requirements to the CSSF, public disclosure obligations, and sanctions for non-compliance. With regard to financial institutions, at European level, the EBA has observed that credit institutions are insufficiently implementing diversity objectives and lack transparency on how diversity is reflected in remuneration frameworks. At Luxembourg level, the CSSF has similarly observed the lack of knowledge of the applicable requirements and observed that diversity policies are often limited to mere declarations of intent. The CSSF and the CAA also increasingly consider diversity when assessing board member suitability for banks, insurance undertakings, and investment funds based on criteria including gender, experience, skills, and background.
It's time to review and adapt your diversity policies to include factors such as age, gender, race, ethnicity, education, skills, and expertise.
Effective policies must specify quantitative and qualitative objectives at all levels with appropriate time frames, define concrete implementation strategies explaining how these objectives will be met, and detailing measures that can bring real change in the short to medium term. Include monitoring and report mechanisms, providing for regular assessments and adjustments.
It should also be kept in mind that policies are often considered as internal regulation, which triggers the involvement of the staff delegation. Beyond verifying policies, it is now also a good time to start monitoring and reviewing HR data in compliance with the GDPR rules to identify disparities in preparation of upcoming enhanced transparency requirements. Apart from this regulatory consideration, training managers on unconscious bias and inclusive leadership and regularly reviewing hiring, promotion, and remuneration process for hidden bias may allow companies to benefit from positive outcomes.
At Arendt, we're here to help you tackle this challenge with legal advice, document review, or consulting on processes.
Stay ahead of the ESG game and don't hesitate to contact us.